Welcome. In this video, can Xn coin be $2? We will analyze this. Don't forget to subscribe, like, and please watch to the end to understand. When we approach the chart from a broader, longer-term, and macro perspective, one of the most striking patterns is the rhythmic behavior of the price in the past. Especially when we analyze it in depth, we notice that after every downward move, the price eventually stabilizes and initiates upward movements again. This is one of the cyclical price behaviors frequently observed in technical analysis and clearly reveals the repetitive nature of market psychology and investor behavior. Looking back at the structures the price formed in previous periods, we can see that most of the declines were tied to panic selling, and after these drops, the price usually recovered and moved upward. These kinds of recoveries after sharp declines are mostly not sudden, but come with stabilizations formed over time. This shows us that the market is in a search for balance in these areas, meaning that after the supply-demand balance is established, investors start buying again. These price movements are technically called consolidation. The longer these consolidation periods last, the stronger the following rallies tend to be. This tells us that there is a hidden opportunity behind the declines, and that these opportunities can yield great returns for patient investors. Especially at the current price level, we can clearly see that a similar scenario is unfolding. The recent decline may have frightened many investors. However, the fact that these levels have been revisited before and each time a rebound has followed indicates that these are critical support areas. Price pauses at these points, weak hands are eliminated, and strong hands gradually enter the market. These entries eventually increase market volume and pave the way for an upward breakout. The fact that a similar situation is happening now is a highly important development in terms of technical analysis. After the decline, the price is slowly starting to recover. This recovery may not just be a reaction rally, but could also signal the start of a larger upward movement. The fact that the price is lingering at these levels for so long shows that buyers are starting to take positions here, and that selling pressure is decreasing. Especially since this price zone has worked similarly in the past, it may have formed a technical liquidity pool and become an area of interest for investors. One of the most important things investors should pay attention to is the tendency of history to repeat itself. This is one of the most important principles in technical analysis. What happened in the past tends to happen again in the future. In this context, strong rallies that occurred after similar past declines may repeat again now. Of course, nothing is certain, but technical data and current price behavior suggest that this scenario holds a strong probability. A similar price movement occurred in previous periods. The price had significantly pulled back, then moved sideways for a while, and afterward began a sudden upward rally. This usually signals the accumulation period followed by a rally phase. If history repeats itself once again, investors who show patience at these levels may benefit greatly from a potential upward move. Also, it should not be forgotten that every major rally is preceded by a decline. These declines are often opportunities for the market to shake out weak hands and allow strong hands to enter. A similar evolutionary process may be happening now. Instead of panicking during such drops, calmly analyzing the market, carefully evaluating technical data, and understanding how similar structures in the past have played out is of great importance. In conclusion, when we approach the chart from a top-down, objective, and holistic point of view, we see that after every significant drop in the past, the price has recovered and even moved on to higher levels. A similar scenario may be forming again now. Therefore, the current period could be a time frame with high potential that should be carefully monitored by investors. Especially patient and strategic investors can gain great advantages during such times. The fact that the price is now starting to recover may technically be a sign of a new uptrend, and this upward move may continue strongly, just like in the past. But looking at this alone is not enough. We need to consider other metrics as well. Keep watching. When we look at the chart from a broad perspective, that is, from larger time frames, we can clearly observe the slow completion of a formation that is quite significant in technical analysis. This formation is the inverse head and shoulders pattern, well known by investors and often a precursor to major price movements. The inverse head and shoulders, IH and S, is one of the strongest technical structures, particularly known for signaling trend reversals, and it often appears at long-term bottom regions, indicating that the market trend may be about to reverse. In the current situation, we see that this formation is forming on a rather large scale. This may imply that the price movement is no longer just about short-term speculative trading swings, but that large investors and institutional money are changing direction, meaning that confidence is slowly returning to the market. The left shoulder of the formation was created by a rebound following a previous decline. The deeper drop afterward formed the head, and now we can say that the price is slowly rising and building the right shoulder, indicating that the structure is technically nearing completion. One of the most important aspects of IH and S formations is that once completed, they carry significant upward potential. According to technical analysis rules, the target of this pattern is determined by adding the distance between the bottom of the head and the neckline to the price after the breakout. When we apply this calculation to the current chart, we can see that the target level corresponds approximately to the $2 range. However, it's critical to note that reaching this target is generally a process spread over time, and the price is not expected to reach it directly and uninterrupted. Because while technical formations indicate direction, it's quite difficult to predict the speed at which the market will move in that direction. Breakouts following large formations like IH and S typically encounter intermediate resistance zones. The price may make corrections, and even pullbacks can occur at certain points. This is a normal process for a healthy upward movement. After the breakout, the price may first test the neckline, then start moving upward supported by volume. What stands out most right now is that during the formation of the right shoulder, the price is showing a steady rise and buyers are gradually gaining strength. If this process continues smoothly and the price breaks the neckline with strong volume, this technically indicates that the formation is complete and shows that the technical target of the $2 level is attainable in the medium to long term. But it must be emphasized again that such technical targets are not levels that will be reached within just a few days or weeks. These kinds of targets become especially meaningful for long-term investors and during major bullish periods like an altcoin season. During an altcoin bull run, that is, when cryptocurrencies in general enter a major upward rally, the effect of such technical formations becomes much more pronounced. Therefore, the fact that the IH and S formation is forming at such a critical point in terms of both timing and market cycle can be considered an important opportunity signal in terms of technical analysis. Reliable reversal patterns like IH and S usually occur at bottom levels, during times when investors are most hopeless and the majority have distanced themselves from the market. For this reason, investors who spot the formation early often get the chance to position themselves before a major rally. The fact that the price is currently forming the right shoulder of the formation shows us that this is a kind of final preparation phase. In other words, the big move hasn't started yet, but structurally it's almost complete. This could be a potentially suitable zone for taking a position. However, of course, risk management should be applied, stop loss levels should be set, and investment amounts should be adjusted in a controlled manner. Because no technical formation has a guaranteed outcome, the market can change direction due to unexpected news flow or macroeconomic factors. But technically, the formation remains valid for now and is giving strong signals regarding the market's upward potential. To summarize, we currently have a technically reliable reversal formation, the IH and S, and the price has structurally completed most of it. The target points to a strong resistance zone around $2. It's important to remember that the path to this target requires patience, strategy, and discipline. However, in the long term, and especially if the altcoin market enters a rally phase, this target may not be so far away. That's why it's important to wait patiently. Yes, friends, I hope you liked the video. If you subscribe to my channel and like the video, more videos will be coming. Be careful in your investments, analyze the risks correctly, and always take strategic steps. I will be with you with different analyses, investment opportunities, and technical information in my videos. I wish you all a lot of profit. See you soon.